If you look at, treasuries, and we saw Jamie Dimon saying, look, yields could be 5%. I know we'll talk about treasuries shortly, but if you look at bonds, where's the biggest repricing risk overall?
I'd love to know how he gets 5%, and also whether it's been sanctioned by the research department. Because is that an off-the-cuff remark? Because where do you get 5 from? For 5% to be possible in the next few years, the Fed's got to be north of 4. The Fed currently says it's going to 3. So I struggle with that. I would take the other side of that trade every day, and have been doing so for a while. So look, it grabs headlines, but I'm not sure whether there's much research behind it.
When I look, Steve, you mentioned the U.S. curve here right now. Let's bring up a chart here that goes back, and it's just the U.S. chart back quite a ways, back to Dwight Eisenhower in the 50s. Yeah. And down we go. Have we broken this trend, Steve Major? I mean, to me, we haven't. It's an interesting log chart, but we still really haven't broken the back of a 40-year disinflation.
Yeah, I think the trend is still down. You look at that chart, you can see that a few key points have broken a few times. People tell me that 3% as a number matters. Frankly, it doesn't. In 2018, the 10-year Treasury has closed at 3 or above on 8 occasions only, and that's in 150 trading days. And to think of all the people, the weight of money that has been shorting Treasuries and been bearish all year, all they've achieved is the loss of the coupon.
Well, do you
It's been the wrong trade.
I'll go with that. Certainly that is a correct statement. Do you reposition here as the mother of all opportunities, or are you trying to guess around Mr. Powell and 1 or 2 Fed meetings out, alive or dead?
Well, I guess my problem is I'm already long. I'm already bullish. So would I add? I guess yes. I think that by definition, we're getting closer to the pause. Now, I don't know whether it's going to be December or some point next year, but the probability of there being a pause at the next few meetings is really quite high. And if the Fed pauses, the market will respond in a way that says that's the end. And that means that the yield curve will have to flatten on a number way below 3. At the moment, people are implying that the flat yield curve will be delivered at around 3%. I think it will have a 2 handle, and it could be as low as 2.3. But let's imagine that by year end, the bond curve is flat and at a much lower level than the forwards currently imply. That's where I think we're going.